You're welcome back. Fintech or financial technology is transforming how Nigerians access banking, loans, and payment. Globally, fintech is one of the fastest growing sectors. And here in Nigeria, apps like OPay and PalmPay provide financial services, loan facilities through third party on their platforms and payment solutions, making them powerful tools for both inclusion and economic growth. Today, we'll explore how fintech can create financial inclusion for small businesses, entrepreneurs, and everyday Nigerians in the Southeast, while also discussing challenges like loan commissions, data collection, and responsible usage. I am joined by Mr. Aniche Ndudim Roland, financial analyst and CEO, Rugon Capital Limited. I know that name, what I said in Aniche, I said it right?
Yeah, you did.
And Ndudim was also right?
Very well.
Okay. You're welcome, Mr. Roland.
Thank you very much.
How you doing?
Fine.
You look money.
Well, thank you.
Okay.
Happy New Year.
Yeah, I wish you the very best.
You're new to the show. Congrats.
Yeah, I wish you the very best. Okay, so let's kickstart. It's fintech.
Yeah.
And I know it's a conversation that you're passionate about discussing. Financial conversation, actually.
Yeah.
So could you briefly explain what fintech means in Nigeria today and why it matters that we have these fintech companies in the country?
Okay. Fintech is just financial technology applied to financial institutions, banking, completely generally, financial institutions generally.
Yes.
And the underlying technology behind it is a blockchain.
Okay.
And so if we need to go back to the history of blockchain, the history came up predominantly after 2008 financial crisis. Okay. In 2009, Bitcoin evolved as a blockchain product and a payment rail. Yeah. But it has its defects right now. And the payment rail, which is the blockchain, yes, it's meant to facilitate payments across board. Okay. Now, we also need to go back to the old financial payment rail established in 1973 by SWIFT, Société for Worldwide Interbank Funds Transfer. The office is based in Belgium. Okay. And it was founded in 1973. And so it's a system where all the banks are connected to each other, they communicate and make transfers. Okay. So we're talking about 1973 till date. That's over 53 years. Yes. Okay. And you could see the world has evolved. And so there was this need to revolutionize the global payment system through blockchain. And now we operate a two-tier financial system, the central banks and the financial institutions, where their function is generate deposits, lend to deficit sector, and make transfers. Okay. Three keys. Now, the fintechs have come up to disrupt, especially the payment system. Because it's faster, it's easy. It's faster and easy. Yes. And cheaper. Sure. Now, the traditional banking systems, when they make payments, there's a settlement part of it which takes time. But like the fintech, the settlement is instant. Yes. You have the Nigerian NIBBS, yes, Nigerian Interbank Settlement System, where the banks settle amongst each other. Okay. But it's done in batches and silos and takes time. Unlike the fintech where
it's SWIFT.
The settlement is instant.
I guess you don't like that.
No. Okay. It's a revolution. And
it's a revolution.
It's changing the status quo.
Okay.
And so that's why blockchain, which we hear of Web3, which is part of Web3, yes, is now in vogue, is now the new thing, is to disrupt the financial landscape. Yes. So that's the essence of fintech.
Okay, so let's get to the part of financial inclusion. Do you think fintech companies are contributing to financial inclusion in Nigeria and here in the Southeast as well?
Okay, yes, they've disrupted the financial payment landscape. Okay. Very good. Okay. But you see, there are two other legs which they are yet to have access into. And because the central bank, which regulates the financial landscape, only recognize them as a payment service provider. You know, banking is
Yes.
you're a collector of deposits, you pay interest, you lend
Yeah.
at an interest rate. Both functions are highly regulated. Then you now make payments across the financial landscape. So they're only doing just one function. That's the fintech company. They're only
Yes.
doing just one function, which is more of payment. They collect money, but they don't pay interest.
Okay. I was thinking that CBN gave license to different fintech companies for different things.
No, as payment service providers.
Just that solely.
Solely.
Okay.
Solely. So the aspect of collecting deposits and paying interest, they're not licensed to do that. The license of lending money,
Yes.
they are not licensed to do that. Now, yeah, there are payment apps that are private lenders and all that. It's not regulated by central bank. They are off it.
Okay.
They are off it. And so, because once you are licensed to collect deposits and lend, you become a gatekeeper of value and wealth.
Okay.
So the fintech companies have not got into that state, but they want to disrupt. So because you have the incumbents, the banks.
Yes.
And so what the banks are doing is they know, hey, this is threatening our turf. So all of them are gradually upgrading globally.
You're right.
Across. So they are all beginning to adopt blockchain payment systems to enhance payments, the entire payment system.
Yeah, I was going to mention something because you said that these fintech companies, they are not licensed to give out loans, right? So we have companies like OPay and PalmPay, and they operate with, according to them, they have third-party other companies that operate under their platforms and they give out loans. But we don't have the problem where people are really complaining about high interest rates, hidden fees, and data privacy concerns. Do you think fintech platforms are really helping Nigerians, especially here in the Southeast, to achieve financial inclusion, or are they creating more problems than solutions?
Okay.
Yes.
I don't know if you've experienced this. Somebody made a payment to my account.
Okay.
That's one of the banks. I don't want to mention the names for fear of being sued and all that.
Yes.
The money came into my account. I got a credit alert.
Okay.
As the money it's in my account. But the account was not updated. Remember I told you, the banks operate a batch system where they have to settle. Payment will come in.
Yes.
But settlement comes at a later time, which causes friction.
Okay.
It's a form of friction. Unlike the fintech companies where the moment payment is made, instantly your account is active. It's very swift. And so that's where the issue is. Okay. So for the fintech companies, you said they use third-party payment system.
Yes.
And the central bank does not regulate. That area is an unregulated market.
Unregulated.
It's unregulated market.
Is that not a threat?
What?
To the citizenry.
Buyers, you see, there's always a caveat.
Okay.
It's a buyer's market. So anything that happens in that between you and your lender is none of central bank's business. They can't intervene. If you lose money, it's your fault. So everybody has to be very careful using loan apps, not regulated. If you get into it, you take swift money to attend to a swift problem. Whatever happens, that's your business.
Yeah, I just want to stay on the regulation part because I find it funny that they are not regulating this.
No.
Do you think it should just go like that? People need to be protected.
Okay, I understand you.
Yeah,
I want to believe the central bank are like watching the entire financial landscape and see there's what you call financial stability.
Okay.
They have a department, a unit, where they see the total volume of transactions in the financial institutions and in the fintech space.
Okay.
And I want to believe they have an idea of what's going on in what we call shadow banking, outside the industry, the lending. And the volume has not yet reached a systemic threat where they need to intervene.
Not yet.
Exactly.
Okay.
So it's what is happening in that sector is retail lending, which is just minute. It has not really threatened the entire financial landscape.
For them to intervene.
Exactly.
Oh.
So that's where the thing is now. And because regulations is on that, it's just a question of time. All the banks will now upgrade their payment systems to DLT so that payment is swift, instant, settlement is just the way you click on your email. When you send a mail, it's 3 minutes. It's less than 3 seconds. And it's the same thing that is supposed to be globally when you're making transfers from Nigeria. If you're making a transfer from Nigeria to the US, it takes 3 days.
Okay.
And you pay a fee of not less than 6%. But with DLT right now, with DLT, payment is swift, 4 seconds. And the fees is less than a cent. If you're paying $100 to the US, you'll be charged like $7. And it will take 3 days. But with a blockchain payment system, payment is 4 seconds. And you'll be charged 0.001 cents. So you could see how cheap it is. Okay. So the advantage is enormous. And for banks doing cross-border payments, where DLT matters, every bank maintains a nostro-vostro account with their correspondent banks. Okay. And every bank needs to fund those correspondent banks, which are all idle. Total funds lying in nostro-vostro across the globe is $27 trillion. 27. And so with DLT, it's meant to free up this capital so that banks can loan more. So you could see it's a bigger market and bigger source of liquidity that is meant to be unleashed. So what the fintechs are doing is just a small part of just payments. They are yet to tap into the big market, which is more of collecting deposits and lending. It's a bigger market.
Okay, since they are not really regulated the way that we think they are, because I was going to mention the interest rates for these loans that the loan consumers go for, right? And at the end of the day, people out of desperation will want to still get it, and they get depressed. You know, get money and get depressed. You get the money, you get depressed. So how do we go about this? How do these fintech companies go down on their rate?
That's the question. I told you, fintech companies are only registered as payment service providers. They don't collect money and give at interest rates. So where would they get the funds to now lend? Mind you, it is regulated. So because if they start collecting money to give interest rates, they will come up with savings products to attract more funds, savings, fixed deposit products to attract more funds to lend. So you can understand it. So their funds are very volatile. The funds are there. It doesn't stay long. They send out. So very few customers will keep funds just idle in their account. But it's not earning any interest because they are not licensed to give interest rate on deposits. Because when they are granted license to collect deposits, you also be given license to lend. And it is regulated. So they dare not go into collecting deposits for savings. So those third-party arrangements they have, they have their own sources of raising money and lending or whatever, but it's outside the central bank. So their rates will be very, very high. And so it's a buyer's beware market. The central banks is there. They've done all the enlightenment. So if you choose to go to a money lender, that's your business, not theirs.
That's on you.
It's on you. So if there's any fallout, it's not their business. So central bank is out to protect depositors of funds with licensed banks, insured with NDIC. So that's why those funds in
Yes.
banks are also insured with NDIC.
Okay.
So all those private money lenders, their funds are not insured. So whatever you're doing with them, that's your business.
Right. Okay. To what extent do fintech platforms support SMEs and young entrepreneurs in the Southeast with access to loans, payment processing, and overall financial management? To go back to that again, that is like the majority of things they are doing currently.
Okay.
But they have the third party doing it on their platform.
Exactly. I said
Yes.
fintech were licensed as payment service providers.
Payment processing solely.
Solely.
Okay.
Solely. So so that irrespective of wherever you are in your village, you can pay money, and if you register online with them, you open an account, you can have access to money through your phones with a data.
Okay.
Has to be with a data. So, but when it comes to lending,
Yes.
that's another whole topic entirely. Which is highly regulated by the Central Bank of Nigeria.
Okay. So I was going to say this. Does fintech help in financial inclusion then?
Yes, it has transformed the payment landscape where payment is instant. Unlike before,
Yes.
where there's a settlement issue. We have the clearing systems where customers of banks pay amongst each other, and they have to go through clearing processes. It used to be 7 days. From 7 days, it got to 6 days, 6 days to 3 days.
Yes.
Now we are almost doing online real time. Check transactions across central banks now is on complete decline. And maybe in a few years' time, checks issuance or clearing systems will be history. Everybody pays across payment landscapes, online real time. But the question is, many a times there's a lag. I told you, somebody made a transfer to my account.
Yes.
I got the alert,
Yes.
but my account was not updated because the settlement part of it has not been concluded.
Okay. All right. It's the beginning of a new year. Many people are looking to get ahead in business and achieve financial stability. What would you recommend assessing credit through fintech platforms or traditional microfinance institutions? Which would you say is better? Because I know you said it's on your own now, but for the fintech, it's more accessible for them. A lot of people, it's so accessible.
Like I keep saying that the fintechs are not lenders.
They're not lenders, actually. They just have third parties.
I will not sit down here and promote a private lending. No, I can't do that.
Okay.
I can't do that.
So
I have to stay within the regulated guidelines for lending. As supervised by the central bank.
Yes.
So the question is, everybody has a will. Go to the private banks to lend, or go source from other persons. It's a means of raising money.
Yeah. Okay. Just to get you there, right?
Okay.
I just mentioned, right, the fintech, so accessible. Can the traditional banking system make theirs this accessible for their customers?
Yes.
Because of financial inclusion. Because for them, you don't have to get the collateral, you don't have to get this, you don't have to get that. You just have to provide some of your data, some information, details about you, and you have the money in your account.
Yeah.
But for traditional banking system, it's a different ball game altogether.
Now, okay. Remember I told you.
Yes.
Banks have locked funds in their nostro-vostro accounts globally to the tune of 27 trillion. That's a lot of money.
Yes, that is.
And with DLT, is meant to free up that funds. So that they have deep liquidity. There are also liquidity tokens. Now, for every DLT, you have a payment rail. What you call crypto. I don't like using the word crypto. I call them digital assets. So any bank that starts using a DLT payment system, distributed ledger technology, they'll be forced to use digital assets to aid liquidity amongst payments and the receiver.
Okay.
Yeah. So we were getting somewhere.
Yes.
So those funds are meant to free up, those funds that has been freed up from the nostril of Ostraka is helped to make banks more liquid and lend more to the sector.
Yes.
It's also, they're also linking up so many markets, what we call tokenization, so that the capital market, which is huge, the commodity market, which is also huge, can all partake into the same chain and increase liquidity in the system.
So when are they doing this? When are they coming together?
It's already before us. Okay.
Is it?
Okay. Let me... It's something, maybe because I'm in the industry, I have watched the trend.
Okay.
Now, before we used to have the LIBOR, London Interbank Offer Rates, where central banks meet in UK and decide unilaterally what the interest rate will look like on a daily basis. It's wrong. It's subjective and can be manipulated. Now, all the banks came together and said, no, we're going to transit from the LIBOR to the SOFR, secured overnight financial rates, which is determined by averages. That was the first change that took place. Now, the second change that took place again is the messaging system. I don't know if you've heard of it. Now, banks are all being informed to migrate to ISO 222 messaging standard. So, it's also a messaging standard that is deeper, has more data, and includes blockchain payments languages, so that it will aid the financial system. It becomes very fast. And now, the use of DLT is the last step, so that banks can make use of it. Now, the biggest economy in the world, which is the US, have passed, I don't know if you've heard of the Genius Act.
The Genius Act, I don't think.
Where they're talking about the use of stable coins. There are also blockchain instruments. Because you have, within the DLT, you have digital assets, which you call crypto. You also have stable coins. Then you also have global stable coins. They're also meant to assist in liquidity and payment across the payment rails in DLT. And so we're moving gradually faster and faster into a new world. And so whatever we're talking, the fintech, they all enable us, so that over time, is it that the fintech companies will take over the banks, or the banks will now take over the fintechs and adopt their payment system to ensure that liquidity is deeper, people have access to funds for their businesses.
Okay. So, all right. What are some creative ways fintech can be used to create jobs and stimulate regional growth in the Southeast? Because I love everything that you have said. What are the creative ways fintech can be used to create jobs and stimulate regional growth in the Southeast? Because we are...
I keep saying it again.
They can't do that.
I keep saying it again. I told you, we operate a two-tier banking system. The central banks and the financial institutions.
Which are the traditional?
They are traditional. They are the gatekeepers. I told you, they are the gatekeepers of wealth and value. So the fintechs are more of payment system. They can't go, they are not licensed to be creators of wealth and value. They can't lend, they can't give deposit, interest on savings. So you need to understand this concept.
I get it, right? I understand it. The only reason I keep hammering on this particular question is just the reality that we are seeing on ground, right? But you being a financial analyst, you cannot just get out of the borders that you have been in, and you understand that it's legit to talk about something that you are so you're unsure of, but you know that this does not offer anything in the long run. Currently.
Now, now the fintech, I follow some fintech companies globally that have global impact. Now, when they came up with DLT, they have to work with central banks and the banks, because they are the gatekeepers of money, of wealth. Let me take you back to your internet.
Okay.
When internet came up,
Yes.
the people that designed it
Yes.
had to work with universities because they're the gatekeepers of information and knowledge. So that everything about information
Yes.
comes on the internet. Any information, universities, research institutions, they all lecturers, they all had to buy into it.
Okay.
So that knowledge comes on the net.
Okay.
That's internet.
Yes.
Now, what we are talking about, fintech,
Yes.
is internet of value. And internet of value,
Yes.
the two gatekeepers are the central banks
Yes.
and the financial institutions. So for the fintechs, for them to come into, for them to be relevant,
Yes.
they have to work with the central bank and the banks.
And the banks. Okay. I just want the both of us to agree on something.
That's I'm taking you somewhere so
that is,
so because fintech, I just laugh at like.
Yes.
Well,
although it's not the reality that is playing out, but I think that what you would want, I think from what I hear you say is this, they should stick to what they are licensed for.
Okay. Now, many of them have beginning to transit to obtaining a banking license. I know of the one I follow in the US.
Okay.
They've been granted a banking license.
That's nice.
They worked with all the financial institutions across the globe.
To get
all up to IMF, World Bank.
Wow.
You have globally systemic banks.
Yes.
There are about 30 of them.
Okay.
That's been classified as systematic. They work with them. Up to even the Bank of International Settlement.
Yes.
You've heard of BIS?
Yes. Okay.
They regulate all central banks and all the banks.
Okay.
So the fintechs I follow right now are working with all of them, and they've been given a pathway to operate like a financial institution. They are coming in as a disruptor, not to destroy the entire system, but to aid the system.
Okay.
So they're not coming to walk outside the banks or walk outside the central banks. It's not possible because central banks still retain the power to create money.
To create wealth. Okay.
So when you say you create money, you're creating wealth. The next people in that line is also the banks.
The banks. Okay.
So for the fintech, they have to walk up their selves and get all the regulatory licenses to operate as a bank. Then they now become gatekeepers of wealth and value.
Okay. I guess we would have you back when they become, in affiliation with the banks. Yes, and we can have that conversation and how they can be wealth creators.
Thank you
so much, Mr. Roland, for coming. It's a pleasure.
Yeah.
All right, thank you so much, our viewers. That's the much we can take on the Eastern Business Report. Many thanks for staying with us. My name is Norma Aniwene. Bye for now.